I might start by saying hello to everybody who's in attendance so far. I think we're at about 57 or so participants at this point. I'm going to wait until we get to a slightly higher number and then I'll start properly, if that's okay. Just give everybody a couple of minutes to join. Okay, so I think we're over the 60 mark, so it looks like the numbers of people joining is slowing down. So I think we'll get started on that basis. So first of all, just a welcome to everybody. I'm very happy to have so many people attending this event tonight. So in terms of myself, Niamh Godin is my name, and I'm here as the chair of the General Insurance Committee of the Society. I'm also a CRO in AXA Insurance. I suppose just to start with by saying that the presentation is being recorded, so you'll be able to get the slides later on, and the recording will also be available. There is a possibility of submitting questions. You can also raise your hand throughout the presentation, and we'll also leave some time at the end for questions. We would prefer to answer all the questions at the end, but if there is something that seems quite important to answer during the presentation, we'll pick that up as we go through. Please do raise your hand or put the question into the Q&A section. In terms of CPD, once you have registered your full name, you're considered signed in for verifiable CPD, so that's fairly seamless. So I might just then introduce the speakers that we have tonight. So we have two speakers, Grania and Ross, joining us. So Grania is going to start, so I'll introduce her first. So she's a director with Taylor Fry with over 18 years experience. She's done work for many of the accident compensation schemes in Australia and the Accident Compensation Corporation in New Zealand, known as the ACC, where she led the technical development of a dynamic financial analysis tool to integrate valuation, pricing and financial projections across ACC's business. Grania also works in the government and social sector areas with a focus on using data to drive evidence-based decisions. She is a member of the Society's Data Analytics Committee. So then moving on to Ross, he is a director with Taylor Fry. It is currently breakfast time where Ross is getting ready to present. So I'm sure you can all guess where he is. So he works in the analytics and actuarial consultancy. They're based in both Australia and New Zealand and has more than 20 years experience. Ross leads the external actuarial liabilities valuation of the ACC. In this position, he is responsible for the annual calculation of ACC's insurance liabilities, which are currently approximated at $60 billion. Ross assists general insurance clients across the full spectrum of actuarial work, including pricing, reserving, strategic direction, and providing analytical insights. Ross is currently the president of the New Zealand Society of Actuaries. So at that, I'll pass over to Grania, and welcome both our speakers tonight.
Okay, thank you for that presentation, Niamh, or that introduction, I should say. I suppose to begin with, there's the usual disclaimer slide. This talk is probably got a little bit more of opinions and ideas in here, so possibly the disclaimer is more relevant than it would normally be in many talks. There's also the competency framework for society members. So these are the areas that are highlighted as being relevant to the talk. So with that preamble over, I'll move on to the main part of the talk. So I suppose firstly, just to give a little bit of framing and to ask ourselves, why are we here talking about accident compensation? So, you know, the first motivation to my mind is that as humans, we do feel that we have a duty of care to our injured and our disabled. And this isn't anything recent, it's something that we've had really since humanity emerged. Having a look on the internet, I found a couple of articles which talked about the prehistory of compassion, to use the headline in the article on the right. So on the left, we've got an image of a skull of a disabled child, the skull is about 500,000 years old, I think, which means that it predates Homo sapiens. So even these very early humans were caring for their disabled, even though they wouldn't have brought a lot of value to the tribe in terms of food gathering and that type of thing. The article on the right about the prehistory of compassion is talking about a Neanderthal skeleton that was found. The individual was maybe about 40 years old, which is quite an advanced age for that time. They had an atrophied upper arm following a fracture that didn't repair properly. And yet, they survived quite an old age. They may have been blind and deaf as well. I'm not sure how they know that, but I trust they know their stuff. So, it's very much the case that we care for our injured. So what we're here to discuss today is, if we're talking about those who are injured through accidents in Ireland, what is the best way that we want to go about looking after them? So I thought I'd put up a bit of a TLDR section at the start, just so you know where we're going in this talk. And so where we're starting from is that the current system we have here in Ireland for accident compensation is what we'd call an adversarial at-fault system. Basically, if you're injured in an accident, if you want to get compensation and support for dealing with your medical issues and all the treatment and other care that you need to find somebody to blame, and then you derive the compensation from them. And the question is this the system that we want to keep going forward, or do we want something else? The current system that we have has sort of evolved over time. I mean, it kind of works, but it wasn't necessarily designed. It's just what grew up organically over a period of time. So we want to ask the question, is there a different way of doing things? As Niamh said in the introduction, both Ross and I work at Taylor Fry, which is an Australian and New Zealand-based company. Ross is a Kiwi. I might be Irish, but I've done all my actuarial training in Australia and have done a lot of work in both Australia and New Zealand. So we're very conscious of how New Zealand handles its own accident compensation scheme. And it does this through a national no-fault scheme. This means that you don't have to find somebody at fault to receive compensation, and it covers everyone. And we want to ask the question, would this be a better system in general for Ireland? Is this something we should consider? So before I just get into the meat of the talk, I just want to cover off a little bit of background. This may not be necessary. I haven't seen who's attending this talk. So this is really aimed at if there's anyone attending here who doesn't have the general insurance background. I just want to make sure we're not using jargon and using you at the very beginning. So just to be clear, by accident compensation, we mean if you're injured in an accident, you then receive the cost of the medical care you need, any rehab costs you need. You may get income replacement because you can't work. You may also get other payments. These, for example, general damages, as in the next point, that may be called special damages here. In Australia, we were calling it general damages. And these are payments made in recognition of pain and suffering. It's basically saying you've had an accident, you've been injured, you've gone through pain, maybe you've been left with a permanent injury. We can't fix this, but we'll give you a monetary amount in recognition of that. We'll also be talking about fault-based schemes and no-fault schemes. So in a fault-based scheme, which is essentially what we have in Ireland, you need to find somebody, a guilty party, for an accident, and then you, as I said, get the compensation from them. Basically, you need to find somebody to blame, and depending on how your claim for compensation goes, you may end up in court, suing that person or that business or group, whatever it is, for compensation for your accident. There's an alternative, which is a no-fault scheme, and that is where you don't have to establish a guilty party. You just get covered for your accident compensation costs. And an extension of that means that if you, for example, cause a motor crash, but it's a no-fault scheme, you could still be covered even though you're the one to blame for the accident. No-fault schemes, at least anyway, for somebody who causes an accident, would not generally have the same level of payouts as a fault-based scheme, and in particular, you're unlikely to get a general damages type of payout for your pain and suffering. Okay, and then the final little bit of background I want to set is just the type of insurances we have in Ireland at the moment. So depending on how you get your accident, you can be covered by different types of insurance. So firstly, if motor is the one that everybody's probably most familiar with, so we're all required to have third-party motor insurance minimum. And one component of third-party insurance is bodily injury. So that means that if you cause an accident, any people you injure as part of that accident are covered by that insurance policy. So flipping it around, if you're a person who's injured in a motor accident and you're not at blame, your compensation will be covered by an insurance policy. You'll need to assign blame to somebody, you'll need to either settle or go to court and argue your case in the common law scheme. If you're the person who causes the accident, you're not covered. You will then, for any treatment you need, you're looking at the hospital system, health insurance if you have it. If you end up with a long-term disability or you're just unable to work for a while, then you may need to fall back in the social welfare system. Work accidents, employers would normally have employers' liability insurance to cover work-related claims. And then if you're injured in a different way, then it comes down to if you can find somebody to blame, you may then be able to get compensation from them either by settling a claim or by going to court. So that would, in that bucket, I'm including like medical accidents, but also, the type of accidents we all hear about, falling on a footpath, falling off a swing, that type of thing. If you can't find somebody to sue, then you're just back to the hospital system, your own health insurance if you have it, and the welfare system. Okay, so moving on. So that was maybe a slightly bit of a long preamble to consider it sort of the exec summary and background setting. What we're going to talk about in the rest of the talk is I am going to continue doing a little bit of background setting. I'm going to talk a little bit about the liability crisis in Ireland. I'll then move on to say a few words about Australia. The slides have a bit more detail in them. I'm going to keep this section short because our main focus is how New Zealand handles its own accident compensation. So Ross will pick that up at that point and he'll take us through the ACC scheme and how it works. And after that, we'll then circle back to Ireland and I'll just talk about whether we can consider or whether we can and whether we should consider something like an ACC scheme for Ireland. Okay, so the liability crisis. I suppose before the pandemic hit and dominated our headlines for the last year or so, a lot of the headlines were focusing on the insurance liability crisis because it was impacting, so many aspects of our society. Individuals were impacted, like our motor insurance premiums were high. Businesses were impacted, a lot of businesses were having issues getting insurance, or if they could get insurance, there were a lot of exclusions and excesses on it, which, placed limitations in terms of how they could operate. And this has a societal impact, there's the economic thing, individuals don't have as much money to spend because they're spending more of it on their insurance. We don't have as many options and things to do because some businesses are closing down because their insurance is too high. Childcare places are struggling to run because their insurance is too high. Bouncy castles might not be available at a fun day, back in the days when we had fun days, because they can't get the insurance. It's something that affected us all, and it's not something that really could be allowed to continue for much longer. So I just, in preparing this presentation, I just went to Google and just had a look into see what type of headlines I could come up with. So these are a few of the examples that I saw. So, one of the problems we have is that a lot of insurers are exiting the liability insurance market because it's just, it's just not profitable to write business here. And from a business point of view, a society point of view, to have a whole load of our restaurants at risk of closure because insurers can't, or sorry, because the insurers are exiting the sector and they're not willing to insure them. I mean, that's not a good thing. Similarly with leisure operators, if they can't get insurance, they either operate without insurance, which is not good if somebody gets injured, or they close down altogether and we lose jobs and we lose our forum for recreation. And again, that's just not a good thing. It extends beyond businesses. Community and volunteer groups were also impacted. So this slide, which I won't read through, but it has a number of quotes from a survey of public participation networks in 2019 on the impacts that they were feeling through, being squeezed on insurance costs and having, exclusions and conditions on the policies they were able to get that were limiting their activities. And it gets to the stage that a group can't run a French conversation class because they said the insurance wasn't too high. This is just a quote I pulled out from the article. I don't know any more of the details behind it, but it does seem emblematic of a problem if these type of community activities are being curtailed. That's not really the type of thing we want. There's also just the overall adverse outcomes to those who are injured. If you have to go through an adversarial process to demonstrate that somebody was to blame for your accident, this can lead to delays in you getting your treatment. And in many cases, getting timely treatment as soon after the accident as possible does play a big impact in how well you recover afterwards. So, and also accident is a traumatic process. To have to go through possibly another traumatic adversarial process to get compensation, we're not really looking after people well if we're forcing them to do that. There's also the controversies around whiplash, and that a couple of Bowman neurosurgeons had a look into it. The headline of the related article went for the dramatic thing that, the best predictor of people getting cured of whiplash was getting a claim settlement, that they somehow seem to stop needing treatment once their legal action was settled. You can look at that cynically and say, well, are these just people exaggerating the symptoms so they can get their treatment? But from my impression from reading the articles, that they were talking a little bit more about something like a nocebo effect. So that is where, even though there's no underlying maybe physical cause of something, we still have a negative perception of it. And the nocebo, it's a bit like the placebo, like you are genuinely feeling something negative, even if there isn't a specific thing causing it. And these surgeons noticed very different outcomes in whiplash between countries with a litigious culture and those without. And just saying that people here were more likely to suffer for longer and in more pain and possibly on opioids with whiplash compared to other societies where there isn't compensation or not very much compensation on whiplash. So, that's just one example, but it's not really serving anyone. So I think it's fair to say this was all on the government's agenda, but then, about this time last year, we really started to notice something, and our little spiky corona friend came along and changed the world, I suppose. So naturally priorities shifted a bit last year, and what had been dominating headlines at the end of 2019 and had been part of the election campaign in 2020 and on the programme for government really took a back seat. There are two reasons. One is the pandemic just totally upended everything. But the other reason is that the things that the pandemic upended were all the things where people get together in social groups, and people getting together in social groups tend to be a lot of the areas impacted by the liability crisis. It's all our social and recreation and eating out, and all those type of activities. So it has taken a back seat, but hopefully, there are vaccines, rows notwithstanding, there are vaccines underway, and again, mutations notwithstanding, hopefully they will return us to some semblance of normality in a few months. And if that happens, the liability crisis is going to come back. So I think, the government seemed to be, cognizant of this. And in December 2020, they issued a press release about things they were planning to do to tackle the insurance crisis. And I've just copied some of the points from their press release. This is copied word for word from the website. I'm not going to go into them. The main thing to take from them is that they're talking about revisions to the existing system to try to make it function better. So it's tinkering with what we have. And, the question we wanted to ask is, does this go far enough? Is there a better way of doing things, or are we happy to stick with what we have? And in particular, can we learn from other countries? And the two countries we thought about were Australia and New Zealand. There are a few reasons for this. There's the pragmatic reason, as I said earlier, we both work there and are familiar with what goes on there. But there are a couple more genuine reasons to pick these two countries. Sorry, not that the first one isn't genuine, but unrelated to the fact that we work there, there were a couple of other reasons to pick those countries. They're both former English colonies. So, obviously with our history, we've also been influenced by the English, and our legal system owes quite a lot to the English legal system as well. So there are a lot of cultural similarities. A lot of Irish people ended up in New Zealand and Australia. There's legal similarities. So, it's sort of like for like. I think it is reasonable to compare the two. Population-wise, they're not that different either. New Zealand is similar to us. Australia might be bigger overall, but Australia is a federal country with 6 states and 2 territories. So the most populous state, I think, is about coming up on 9 million people, if I remember correctly. That's New South Wales. So it's not a million miles away from what we have here in Ireland. So whatever, and insurance in Australia works on a state basis. So whatever they do, they are doing it with population similar to what we have. Okay, so I'm quite conscious of time. We've got quite a lot of material to get through. So originally I was going to say more about Australia. I've condensed my Australia bit down into a slide or two. I can take further questions on it at the end, but I've left the slides in the presentation. So if you're interested, you can pick up a copy of the slides afterwards once they're available, and you'll see a little bit more. Okay, so just to quickly set the scenes, one reason why Australia is, I suppose, a good comparison to Ireland is that in some ways it manages liability insurance very similar to what we do here, in that, like Ireland, it has different insurance for motor, work and other accidents. So in that way, it's similar, but there are a few differences. So firstly, with motor, in Australia, they separate out the third-party bodily injury insurance. So that's its own separate product. And then you can still get comprehensive motor insurance, which covers everything else. So your third-party physical damage, your fire and theft, and then damage to your own vehicle. So that's an optional product you can buy if you want to. And then the third-party bodily injury bit is purchased as part of your registration. So that's, if you're injured, you'll be covered. If somebody else injures you from a vehicle, you'll be covered by that. If you are the driver of a vehicle and you injure yourself, then some states do actually have a no-fault system, which means you get some coverage through your insurance policy. Other states that have a fault-based system, then you're like Ireland, you're using the hospital system and your health insurance. The exception is if you're catastrophically injured. Now, catastrophic injuries are things where you need long-term care. So we're talking about like a brain injury or a spinal cord injury. For those type of injuries, you can be accepted into the National Injury Insurance Scheme, even if you're the one who caused the accident. And this will look at providing long-term care to you. Work is covered by employers' insurance, workers' compensation insurance, and it's a no-fault based scheme. It's generally provided by a government body. It's not written in the private sector, so it's not done by insurers. And then other accidents, you've got your medical malpractice insurance, and then you've got public liability. So that's similar to Ireland. It does also have the National Disability Insurance Scheme, which will provide support to people who are disabled. And that can include people who are injured. And, if you're really badly injured by, unfortunately, some people break their neck diving into the sea and hitting rocks. And so something like that, you might fall under the National Disability Insurance Scheme. So, just to summarise a little bit about Australia, why is it useful if we're considering insurance reform here in Ireland? Firstly, there's a wide range of experience there in terms of how they've handled insurance and insurance reform. As I said earlier, it's a federal system. There's 6 states, 2 territories. Each of them does insurance. They're responsible for their own insurance. And they've all done things in slightly different ways. So you've got 8 different experiments going on, 8 different sets of experience to draw from. In particular, with motor bodily injury, I mentioned this earlier, some schemes have fault-based insurance, so you need to find somebody to sue or to blame. Some schemes have a no-fault scheme, but even then there may still be, you still may be able to claim extra compensation if there is somebody to blame, but the no-fault means that the person who is the driver is also entitled to some compensation costs or care costs. The other thing about motor in Australia, and just to stress by motor, I mean motor bodily injury, some of the states have this motor insurance in the private sector, and some have it provided by the government. So it's, it's really quite a mixture over there. So there's quite a lot of different ways of approaching things. But even the states, like one of the states I'm most familiar with, because I used to work on it, is the Queensland Motor Bodily Injury Scheme, or MAIC, M-A-I-C. And that is written in the private sector. So there are a number of insurers who compete for the insurance there. But it's still got quite a lot of government oversight. So the government, the government will specify a range of premiums, or like a range in which premiums can be set. And they also specify the relativities that can be used for that insurance. Relativities are vehicle type. You cannot differentiate on anything else. So no differentiating on age or where you live, just purely by vehicle type. A couple of other things in Australia. I'll just jump to the one at the bottom, minding the gap, helping the catastrophically injured. I covered that in the previous slide. The National Injury Insurance Scheme and National Disability Insurance Scheme came in about, I think it was 2008 was when things started moving in that area, and they were to, plug the gaps to deal with the people who were being left behind, like an at-fault catastrophically injured driver. And finally, the other thing that might be of interest in Australia, well, not another thing that might be of interest in Australia, is the period of tort reform or court awards reforms that they went through in 2001, 2002. So there was a number of years where liability insurance had been mispriced. A major insurer failed, and they went through a system of reforming what awards were made in the general damages area. So that's pain and suffering costs. They looked at things like introducing thresholds, caps, sliding scales. Some of this stuff is being talked about in the government press release, but perhaps the Australians are a little bit more prescriptive about what the courts can and can't award. So that is just a very quick whistle-stop tour of Australia. I am now going to hand over to Ross. So I'll just flick forward to the New Zealand section. And yeah, I'll let Ross take over and take you through ACC.
Cool, thanks, Grania. So I'm going to take you through the next section, which talks about ACC. Grania's still going to control the slide, so because we didn't want to try and push the technological boundaries too much. So if you could just move to the next slide, please, Grania. Alrighty, so a good place to start, I thought, was just a quick comparison of how New Zealand and Ireland are similar. And as Grania mentioned earlier, there are a number of similarities. So we're quite similar in terms of population, and not just that, as well as having a similar total population, the vast majority of our population resides in one city, which tends to dominate the rest of the country. We also have sort of relatively large rural populations as well, and yeah, as Grania said, there's a lot of links, so we've been impacted by the English. There's obviously a lot of Irish people have moved to New Zealand back in the day, so Dave Gallagher, who was one of the original All Blacks, so was the captain of the original All Blacks who toured the British Isles back in 1905 and 06, was originally born in Ireland, and he's sometimes called the first All Black, so there you go. However, there are some differences there as well. As you can see on the map there, New Zealand's just a little bit bigger than Ireland, so approximately 4 times the size of Ireland. So this means we've got a lot more room for things like sheep and practicing rugby and things like that. We're also a long way away from the rest of the world. So as a result, our economies tends to be a bit smaller, and we're also quite reliant on agriculture and other primary exports. Another key point, which a lot of people probably don't think about, is that New Zealand is a really young country compared to the rest of the world. So it's estimated that the humans first settled in New Zealand around the 1300s. So that's when the Pacifica people found New Zealand, so migrating from the South Pacific down to New Zealand. So basically, we've only had humans around for 700 years or so, and European settlement only really began in the early 1800s. So the fact that we're a long way from everywhere and we haven't had humans for a long time is probably the main reason why most of our, well, not most, some of our native birds forgot how to fly, notably the kiwi. And so if you move on to the next slide, which talks about the history of ACC. Alrighty, so in terms of ACC, so as mentioned before, I'll say ACC, but the full name is Accident Compensation Corporation. And so it's something that New Zealand's had for quite a while, but in terms of sort of the longer history, so New Zealand's had workers' compensation since 1900 was when it was first introduced to New Zealand. Initially, and even back then, so the first workers' compensation scheme, while it was just covering workers' compensation, it was still a no-fault scheme. So it required employees to take out insurance and provided compensation to employees who got injured. However, the level of compensation that was provided was relatively limited, so it only provided compensation for 6 years after an accident. So if you were seriously injured and couldn't work, there was obviously a shortfall there. So this scheme was initially introduced early on. There was a third-party motor scheme that was also added in 1928, and sort of they were the main schemes for the first half of the 1900s. But then during sort of the late, well, in the 60s, there was a sort of growing frustration around the level of protection that these schemes were providing. And on the back of this frustration, the government commissioned a Royal Commission report, which was undertaken by Sir Owen Woodhouse, who was a judge over here. And he produced a report which is commonly referred to as the Woodhouse Report. And this report that he did is basically the key founding document on which ACC is based. And doing a bit of research, so the New Zealand Law Society recently wrote an article talking about the Woodhouse report, and they noted that the report at the time attracted worldwide attention as it exposed the shortcomings of the common law fault system, which relied on accident victims being able to prove their injuries had been caused by negligence or a breach of duty or care owned by the other party. And so the report's recommendations basically effectively were looking to move away from this, finding fault, and instead we're looking to provide compensation, and so regardless of the fault. And so in his report, Woodhouse had basically 5 basic principles, which we've listed there. And so those principles were community responsibility, comprehensive entitlement, complete rehabilitation, real compensation and administrative efficiency. So effectively, he was looking to completely sort of rewrite the way things were done. And so on the back of this report, there was a scheme. He recommended a no-fault scheme which provided cover for people. So his report recommended that it provided cover for everyone, but the initial Accident Compensation Act that was introduced in 1972 initially just focused on people who were working, so it didn't cover people not working or students or older people. However, that was then extended in the following year to cover everyone in New Zealand, basically. So if we move to the next slide. So just go through now how the scheme works. So obviously the scheme's been going since 1974. There have been a number of changes to the scheme over time. However, the basic I guess, premise of the scheme is that it provides no fault cover for everyone in New Zealand. And so this includes visitors, so tourists back when they were a thing. So if you're a tourist in New Zealand and you are injured in an accident, you will also be covered by ACC. It generally only provides cover for accidents. There are some sort of areas where it will provide other cover. So what we call gradual process claims, so hearing loss, so claims that are sort of due to accident or work environments, but develop slowly over time, and asbestosis is the other one. It also does provide cover for treatment injuries. So this sort of, it initially was medical malpractice, but this was widened to sort of cover all treatment injuries. And so this will include things such as birth injuries. And so if, sometimes you have seriously injured babies during birth and they will be covered by ACC. It also does provide some cover for victims of sexual violence as well, which is another area that's sort of developing quite a bit at the moment. So the ACC, it's a Crown entity, so it's governed by a board and it has a government minister, but it does operate like an insurer. It employs almost 4,000 staff and they manage all the claims to the scheme. And because the scheme covers everyone, there are a large number of claims. So ACC gets approximately 2 million claims a year. They also look at they collect work levies from companies that are providing work cover. They set the levies, and ACC also is involved in injury prevention programs, and they also have an investment team which look after the investment funds that back the liability. So yeah, so that's sort of the ACC scheme. So so I guess so the other point to note, so the scheme currently is fully funded. What we mean by fully funded is effectively it's funded like an insurance company. So as accidents happen, ACC tries to fund for the future cost of those accidents over the lifetime. In the past, there have been periods where the scheme has been pay-as-you-go. So in a pay-as-you-go scheme, obviously you're just collecting money to cover the cost of accidents that are paid during a year. Obviously, this will create cross subsidies as people age, because people who have had accidents in the past still receive payments in the future. In a pay-as-you-go scheme, they get funded by just people paying the money each year. And so it's been fully funded since 1999, and that seems to be quite embedded at the moment. The scheme's also split into different accounts, and these accounts effectively reflect the different type of claimants that the scheme can have. We'll go into more detail around how these accounts are funded, but the accounts there's an earners account, so this is covering people that are working but get injured outside of work. So if you are injured playing sport or injured doing maintenance around the home or something like that, you'd be fall into the earners account. Then there's a motor account, which is pretty obvious really, so people injured in motor accidents. The work account, which is people who are injured at work, and so that's most like workers' compensation as you see in other places around the world. And then there's the treatment injury account, which, as I mentioned before, is for people who are injured whilst receiving medical treatment. So it's roughly similar to medical malpractice. And also the non-earners account. And so non-earners is effectively anyone who isn't working. So children or retired people, if they get injured, they fall into the non-earners account. All right, if we move on to the next slide. And so the way ACC works is it provides benefits for people who have had an accident. Generally, there's sort of three groups of benefits that are provided. So there's either treatment costs, there's non-financial support, and then there's financial support. And so I've listed sort of some of the main treatments that are provided there. I'll sort of go through each of them in turn. In terms of financial support, one of the main benefits is weekly compensation. And so this is provided to all participants in the scheme, regardless of which account you're in. So if you're in the earners, so if you have an accident outside of work, you're still eligible for weekly compensation. I guess the one difference here is the non-earners account. Obviously, if you're a non-earner, you aren't receiving any income. They do sometimes get weekly compensation. So if you're a child injured, which then means you can't work at a later time, you will be eligible for what they call loss of potential earnings. But generally, the non-earners account is the one account that won't get weekly compensation payments. Financial support is also provided for fatal injuries. So there's weekly compensation for dependents of people who have died, and there are also lump sum payments for permanent injuries, and so that's similar to the what you see in other schemes, and so they are generally fixed costs based on the level of injury you've sustained. In terms of treatment costs, these are generally medical treatments, so things like doctors, physios, and other such medical treatments. ACC will also cover the cost of surgery if you require surgery due to your accident. Some medical treatments require co-payments. So if you go to the doctor or the physio, ACC will cover part of the cost, not all of the cost. And so you'll pay some of the cost yourself. This was introduced sort of back in the mid-2000s, as we're seeing the ACC at the time, we're seeing increasing costs from those areas. And then the final level of cost is the additional supports. And so this covers a wide range of things. So the most obvious things are, obviously if you need aids or equipment, so if you need crutches or things like that, they'll be covered by ACC. But it also covers quite a wide range of other things. So if you need childcare support, for example, or if you need home help, so you're injured and you can't maintain your home, you can get temporary support from ACC, or if you need in-home care if you're seriously injured. They'll also cover things such as transport, and so I've seen examples in the past where people haven't been able to get to work in the normal way, and so ACC will effectively cover their transport costs to get them to work, to basically keep them working rather than having them on weekly compensation. So I mentioned before that there's a large number of claims. A key point here is that the vast majority of claimants only receive benefits for a short period of time. And so, so in most of the cases, you'll have a single visit to the doctor, or maybe you'll go to the physio and get sort of 4 or 5 treatments, and that's it. You're all done and you're fully rehabilitated. And so in those cases, ACC's costs are relatively short term, and there's obviously no financial liability from an insurance point of view. However, there are some people that get seriously injured, so motor accidents or serious injuries that happen outside or at work or outside of work, and in those cases you can end up receiving benefits for the rest of your life potentially, and they tend to be where a lot of the liability attaches. And as Neve mentioned earlier, there is a significant liability associated with the scheme. So it's approximately $60 billion at the moment. That's New Zealand dollars. I forgot to look up the exchange rate, but I think the euro to New Zealand, it's probably 0.7 or something like that. So it's a little bit lower, but still it's a large number. In terms of that liability of 60 billion, the two main components are serious injury claims, which are $28 billion. So those are those longer term claimants I was talking about before, and also weekly compensation payments. So whilst in the 2020 year, there are approximately 124,000 people that receive weekly compensation. Around 16,000 of those are people that have been on weekly compensation for more than a year. And these are people that ACC would classify as long-term claimants. And so they tend to be where the liability is associated. So again, it's small numbers of people which are generally creating the liability of the scheme. Alrighty. So moving on to the next slide. So as a way of an example of how ACC works, we thought we'd use a personal example because it's always easier talking about something that you know. And so in my case, I'm a football player, have been since I was, knee high to a grasshopper. And about 10 years ago, I twisted my knee playing football. Wasn't in a tackle situation, so I wouldn't have had anyone to blame if it was a fault-based scheme. I was just trying to turn to change directions and my knee went out from underneath me. I had trouble with my knee over the years, but this was a specific injury. You could point to a time and place when it happened. As I've done it before, I knew that there's no point going to the doctor. I just went straight to the physio. When you go to the physio, they will basically fill out an ACC form for you and send that through to ACC. The claim isn't accepted straight away. However, the physio is generally pretty good at working out whether it's going to be accepted or not. In this case, it was pretty obvious. And because it was a physio and it required co-payments, I was paying part of the cost myself anyway. At the time, I'm not a professional athlete, so I wasn't eligible to go and get sort of all the fancy scans that people will get, like Virgil van Dijk's and such not. So the physio was not entirely sure whether I'd done my ACL, but he didn't think I had. But the initial plan was just to do basic rehab until the swelling went down and they could get a more accurate assessment. So we started with that approach. However, then after a couple of weeks, my knee started to lock up intermittently. So you're sort of walking along and your knee just won't move. Went back to the physio, talked about that, and he said, you've probably got some torn cartilage, which is then getting stuck in the joints. So he immediately referred me to a specialist. And also, as part of going to the specialist, also got x-rays as well. So trotted along to the specialist. He sort of went through my case notes, asked me a few questions, and then basically recommended that we had arthroscopy surgery. So again, he didn't think the ACL was ruptured, but obviously the torn cartilage was creating issues, so he needed to get in and cut out some of that. So at this stage, the surgeon applies to ACC for a request for surgery, and we have to wait back to get acceptance from ACC before we can have that surgery. And so that took, I said a couple of weeks, it was a few years ago, so I can't remember exactly how long. It may have been a couple of months maybe. But it generally happened relatively quickly. So at least I would have said 3 months after the injury, I would have been having surgery. The surgery was undertaken in a private hospital, but equally it could have been done at a public hospital. It sort of just depends which surgeon you've gone to and where they do their operations. And I guess from my personal experience, I wasn't the only knee arthroscopy that he was doing that day. I think there were sort of 4 or 5 of us sort of that he lined up and just dug. So a nice little earner for the surgeon. And then following the surgery, I then went back to the physio for more rehabilitation and basically had a complete recovery. As I'm an office-based worker, I was able to work throughout. However, if I'd been a manual labourer, say a builder or something like that, I wouldn't have been able to work. And in that case, I would have been eligible for weekly compensation. I was also able to walk on my injury. If I hadn't been able to walk, as I mentioned before, ACC potentially would have paid for transport costs to get me to and from work. If that's, if the difference is, working or not working, they will generally try and do what they can to keep you at work. Because, evidence suggests that if you start on weekly comp and you don't get off weekly comp, you tend to turn into long-term claimants. And that's obviously something that's not good for you as a person and not good for the scheme either in terms of liabilities. Alrighty, so we'll move on to the next slide now. So obviously I've talked a lot about how the scheme works and mentioned the fact that there's a large amount of liabilities. So whilst there are liabilities behind it, there's also, because ACC charges levies and they try to fully fund, there's a large amount of assets as well. So I think the size of the asset pool is about $47 billion at the moment. Obviously, there's a disparity between assets and liabilities. So if they were a normal insurance company with $47 billion of assets, but $60 billion of liabilities, things wouldn't be looking very good. However, as a government entity, they aren't required to meet normal solvency standards. They're also, as they're government backed, the liabilities for ACC actually go into the government accounts. So if you look at the New Zealand government accounts, there's a line there which says, I think it says insurance liabilities, and the majority of that is ACC. There's a few other things that go in there as well. But the other point to note about the liabilities, obviously discount rates have been falling, as I'm sure most of you are aware, and that has increased the liabilities significantly. So I think discount rates have put up the liabilities about $16 billion over the last 2 years. So obviously 2 years ago, the assets of the scheme were a lot closer to the liabilities of the scheme. However, in terms of funding, so I mentioned the 5 accounts before. Each of the accounts are funded differently. And so for the earnest account, it's funded out of income tax. So effectively, the government charges a levy which goes on top of your income tax. So the main tax rate at the moment is 33%. It's actually technically 34.21% because the 1.21% gets added in as well. And so it just comes out. And so most New Zealanders probably aren't aware that they are paying an ACC levy. But they are, this comes out of the income tax. And so that's collected by Inland Revenue, which is our tax department over here. And then the motor account, this is covered by a combination of vehicle registration fees and petrol levies. And so the petrol levy is 6 cents a litre. So every time you top up your tank, you're paying ACC levies on that. The way the vehicle levy works is relatively unsophisticated. So it's generally just a flat rate for all petrol-based cars. Different vehicles, so diesel vehicles, for example, diesel doesn't attract the petrol levy, so diesel will pay the full costs of the registration and the registration fee up front. So they've got a different registration fee to vehicles. And motorbikes also have a higher fee because motorbikes tend to have higher accident rates and higher serious injury accident rates, and so they pay a higher levy tax. Though if you ever talk to a motorcyclist in New Zealand, they will tell you blue and blind that they've been ripped off, and it's not fair that they have to pay more than cars. However, if you look at the claims information, it's not the case. And then there's the work account. So this is funded like most workers' compensation schemes would be. So effectively there's wage levies. So employers will pay an ACC levy. So ACC invoice them on an annual basis and they'll pay a levy. I've got a flat levy rate in the table there. However, whilst that's a flat levy rate that ACC calculate when they set their levies, basically what they do is they charge different levies for different industries. So if you're in a high risk industry, you'll pay more than that levy rate. If you're in a low risk industry, you'll pay less. And there's also sort of more technical details in the levy as well. So if you're a larger employer, there's some experience rating that goes on as well. But for the purposes of the scheme, it's effectively paid through levies. And then so the last 2 accounts are the treatment injury accounts. So these are split between earners and non-earners. So they effectively just fall into those 2 pools. And so they're paid as part of those levies. And then the non-earners, so this is the one account that effectively can't be funded through a tax on or a direct tax. And so it's funded through what we call a government appropriation. So effectively each year the government pays a large chunk of money to ACC as part of the annual budget process. So effectively it's paid by the government, and as such it's funded through just general taxation that the government receives. In terms of how levies are calculated, they get set every 2 years. They having said that, we're about to change to setting them every 3 years. So the levy setting process, it is quite a long process. So the process includes public consultation. So that's when the motorcyclists get their chance to write in and say, it's unfair that they get charged more than cars, because the reason they get involved in so many accidents is because the cars don't see them. It's not their fault. And so effectively, so ACC will do the analysis, work out what they think they need to charge, then go through public consultation. And then after that consultation, there's a recommendation that goes up to Cabinet, and Cabinet have to accept it. And then any levies that are set are passed through regulation. So effectively, they have to put through a law which sets the levies for the next 2/3 years. Generally, and in setting these levies, ACC have funding policies that they set. This funding policy has also just recently changed. So now the funding target is 100%. So effectively what they're saying is that any levies they charge should give enough money to pay for the claims costs that are coming up for that year. And also if the scheme, if the overall account is in deficit or shortfall, they have to make up any deficit, or if they're in surplus, they can sort of underfund. And so what we've seen recently is that a few years back, so when the last levy setting was done, a lot of the schemes were in surplus, and so the current funding levels are probably slightly under the cost, because they're trying to hit a funding target of 100%, or would have been 105 back then. Whereas now the schemes are currently roughly just on target, but the government has also excluded risk margins. So in setting these funding levies, they don't look at the risk margins that are on the liability, so they're just looking at the true central estimate. And the reason for this is just the economic pressure that the scheme's under, obviously, and also, the official line is to provide more accountability and transparency. So it's reflecting the true cost of accidents, rather than the cost of accidents plus a little bit extra in case the cost turns out to be slightly higher. So that's probably all we need to cover on the levy setting side of things. So moving on to the next slide. So additional information about ACC. So what I've gone through today is sort of the basics of an injury scheme. So an insurance company. However, ACC's remit is wider than just funding accidents. So if you look at their vision statement on their website, it says we help prevent injuries and get New Zealanders and visitors back to everyday life if they've had an accident. So the key point to note here is that we help prevent injuries. So that's the first half of the statement. So effectively, injury prevention is what they're more focused on than rehab, if you look at their vision statement. And so as such, it is a strong area that ACC look at, and they see injury prevention as an investment. So if they can put money into injury prevention and prevent accidents, that has an economic and social and also personal impact on New Zealanders. And so it helps make New Zealand a better country, and so it's money well spent, assuming that they do prevent injuries as hoped. And so they tend to work with community partners or other government agencies in providing these injury prevention projects. So an example of some of the recent injury prevention programs they've done, they have a Rugby Smart program, which they have developed in conjunction with New Zealand Rugby, and according to the annual report, that's prevented 25,000 rugby injuries. They also have a Ride Forever initiative, which is around motorcycle education program for improved motorcyclist education, or motorcyclist riders' skills. And this is an ACC direct initiative. So this is an example where ACC's done this on their own without other support. They've also contributed to things such as the government introduced a guns buyback scheme following the Christchurch mosque massacre over here. So effectively, government's looking to reduce the number of firearms in New Zealand, so purchasing firearms off the general public, and so ACC contributed to the cost of that scheme. And again, they did that through injury prevention. So less firearms in the community should result in less firearm accidents, which is seen, should reduce the risk and hence reduce the number of accidents associated with firearms. Another key point about ACC is that whilst they provide workers' compensation cover, they're not the government entity that's responsible for workplace safety. And again, this comes back to the fact that it's a no-fault scheme. So as a no-fault scheme, ACC can't go in and say to an employer, this accident was your fault, therefore, you need to be, and so the ACC scheme isn't designed to encourage employers to just be carefree and sort of, not worry about workplace safety. It's still, we still want employers to look after their employees. And so as such, there's a separate government agency called WorkSafe. As the name suggests, they're interested in workplace safety, but they will also be the entity that will investigate. So if there's a serious workplace accident, WorkSafe will go in and do an investigation, and they've also got the power to prosecute people. So if an accident is deemed to be due to an employer's negligence, WorkSafe can prosecute under the Work and Safety Act that we have in New Zealand. And then, yeah, the other point is around fraud. So obviously, given the size of the ACC scheme and it's all encompassing, all accidents in New Zealand, there's a larger, area of fraud that could happen. So generally, there's sort of the two main, or the two most common areas of fraud that you'll see in the ACC scheme is fraud by providers. So these are generally medical providers, and it's false invoicing or providing services that they didn't. And so there's a few examples of this that you'll see each year. So a recent one is in Queenstown. There's a chiropractor who was charged with $135,000 of combination of fake appointments. So they're putting in appointments that didn't happen or padding out appointments. So they see someone for half an hour, but they claim for an hour worth of time. And so these types of fraud are basically detected by ACC. So they'll be looking at average payments by provider, and where they see providers that have higher than usual, they'll look a bit deeper and then sort of dig up what's going on there. And then the other area of fraud is fraud by claimants. So, the classic example is someone who either receives weekly compensation payments and goes back to work, generally on the side. So they'll go back to work doing, say, cash in hand jobs or something like that. Or they've got another job and just haven't told anyone and it hasn't been joined up. Or the other example is you stay on weekly comp when you have been rehabilitated. They haven't said that. So to get weekly comp, you do have to get medical certificates. So obviously, hopefully the requirement for medical certificates reduces that type of fraud. Having said that, it's still a possibility. So ACC do have a team that investigate fraud. Obviously, they don't generally publicise this too much, and particularly like the claimant fraud area is something that you tend to get a lot of bad press about. So if someone is investigated for weekly compensation fraud and they don't feel like they have been fraudulent, it's very easy for them to go to the press and say, oh, ACC have been bullying me and they've hired private investigators to follow me around and see what I'm doing, and it's not fair. I'm just I'm just injured and they're just picking on me. So that's that. So I'll summarize now because we're sort of rapidly running out of time. And so just to summarize, I thought I'd go through what I see some of the strengths and weaknesses of the scheme. And so the most obvious weakness is that it doesn't cover the full health spectrum. So it only covers accidents. So if you are ill, or you say you get cancer or something like that and you can't work, you're not covered by ACC. And another example that got a bit of press a couple of years ago was a family who suffered food poisoning and they weren't eligible for ACC because food poisoning wasn't deemed an accident. There's also some grey areas around coverage. So in particular, injuries due to wear and tear. So you could argue, my knee was just due to the fact that I've been gradually injuring my knee over time and it's slowly getting worse. I guess in that case, it was a bit clearer because there was a specific point where it went from being good to bad. But some injuries, such as shoulder injuries and things like that, it can be quite hard to work out whether it is an accident or just an old age injury. And so ACC do decline some claims, and so they've got roughly a 3% decline rate. However, if your claim is declined, you've got the ability to get an independent review process. And I guess around this full coverage of spectrum, it is something that does get some press from time to time. So in 2018, there was Sir Geoffrey Palmer, who was a past Prime Minister, did a presentation as part of the Sir Owen Woodhouse Memorial Lecture, which they have each year. And in his lecture, he argued that the inability of the scheme to cover for things like sickness was creating an inequality in the scheme, which goes against the original Woodhouse principle of comprehensive entitlement. So it is something that's talked about, though I don't know that it's something that necessarily there's a lot of government appetite to cover, given the size of the scheme as it is already. And the other point of note is that the scheme can suffer from political, I guess interference is the wrong word, but basically the focus of the scheme can change under different governments. And an example of this, there's been some recent allegations that ACC had a strategy to exit claims from the late 2000s to the mid 2010s. And so again, this has arisen from a claimant who's been denied ACC, and they're gone to court, and part of the defence is this argument. And so the period that they're talking about just happens to be the period when the national government, who's New Zealand's more right-leaning party, was in power. And so the argument there is that the government appoints the board, and so the board would be putting pressure on ACC to keep the cost of the scheme under control, would be what the argument would be there. However, flipping to the strengths, so the first strength is that sort of somewhat in contrast to this point, the scheme does seem to be fully accepted by both sides of the political spectrum. So there hasn't been any real substantive changes to the scheme in recent years, and that's despite the fact that we've had both left and right governments in recent times, and the current government, which is a Labour government, so a left-leaning government, who are marketing themselves as being a transformational government. They don't seem to have any sort of desire to do anything to ACC. So it suggests that they're happy with the scheme as it sits at the moment. However, the key strength of the scheme, and this is sort of where the origins of this presentation came from, is the no-fault basis of the scheme, and in particular, as part of having the no-fault basis, it's written into the ACC Act that because it provides comprehensive cover, if you suffer an accident, you cannot sue anyone in relation to that accident, so you can't sue for damages. And so this has created a much less litigious culture in New Zealand. It's not to say that we don't have lawyers. We do still have lawyers. However, we just don't have that ambulance chasing culture that we seem to see in other places, including countries such as Australia. And an example of this would be, I guess, in terms of third-party insurance. So if I was a 21-year-old male looking to get third-party insurance in New Zealand, you're looking at an average premium of $300. And my understanding of the market elsewhere is that that's not the case, in particular in the UK. So. And then lastly, there is a large investment fund, and the investment team at ACC tends to achieve quite good returns, and this fund also enables ACC to invest in other things such as injury prevention. So as well as providing benefits to New Zealand in terms of rehabilitation services, it's also providing an economic benefit to the economy as a whole in terms of having an investment fund that invests in things such as New Zealand bonds and also invests in injury prevention programs. So that covers the ACC scheme, so I'll hand back to Grania now.
Thank you very much for that, Ross. So I will try to wrap this up quickly because I'm conscious we have run a bit late. So you can probably guess where we're going here. We sort of flagged it at the start. What we're saying is, should we just imagine we can wipe the slate clean here in Ireland and go back to the beginning? And if we were able to create any type of accident compensation scheme that we wanted, what would we want to create? I mean, if we were going to do that, I think the starting point is to think about the various stakeholders in that accident compensation scheme and whether they're being served by what we currently have and whether they'd be better served by something like what New Zealand has. So, I mean, very quickly, we've identified 6 key stakeholders, starting from the claimants and those who are injured, who want to be looked after. And under the current system, if you can find somebody, a guilty party to allocate the fault to, then you are entitled to compensation, but you may have to go through an adversarial process in the courts to get that compensation, which may or may not end up in your favour. That can delay you getting the treatment, which can have long-term impacts on your outcomes. And additionally, if you're very badly injured and you get a big lump sum settlement, that's intended to last you for the rest of your life. But very few people have the expertise to manage that type of money. So, even if you do get the award, does it cover what it's intended to cover? Policyholders, both individuals and business holders and community groups, need to be able to go about whatever it is they're doing without fear that they'll be sued and have all their possessions and money taken out of them to cover injury costs for somebody else. So whether that is insurance or something like the ACC, they need something to be available and they need it to be affordable. And also the coverage needs to, like where in the current crisis, often there is insurance available, but there are high excesses or exclusions, and that can impact what's available to the policyholders. So again, you know, there are definite issues with the current system, and perhaps, you know, perhaps we should consider that something like what New Zealand has would be a better outcome. And society sort of subsumes both the individual and the policyholder, like what's best for society to work. I mean, what's best for us to work is that, you know, we're all covered if we get injured and we're not paying a huge amount for this. And right now, under our current system, there are a lot of legal costs in there, and there are the very high general damages awards, and just the whole infrastructure around, you know, the legal system, the adversarial system adds a lot of cost that doesn't exist in New Zealand. There are other stakeholders. I guess we'd argue, while they're important, probably the first three are the most important. But, you know, from the government's point of view, they do want a system that works, because if something breaks, they have to pick up the pieces. They do want to get re-elected, so that's going to come into their consideration. Insurers are obviously a key stakeholder. I mean, they want to have a viable business. They want to get a return on capital to, you know, to meet shareholders' needs. At the moment, yeah, I mean, comparing the two different options, I mean, right now, some of them have chosen to withdraw from certain markets because they're not profitable. So that's not ideal. But on the other hand, if you do move to an ACC type system, then the market is permanently withdrawn from them. So the area in which they can write business is reduced. And then finally, we get on to people who work in insurance, which I suppose there are probably quite a few people here listening who do work in general insurance. So at an individual level, I mean, we do want a job, but, you know, I just wonder if there possibly a conflict with us that, you know, we work in the system as it is, but actuaries, for example, do have a duty to the public interest. So do we have a duty to see, are there ways we can make the system work better for the key stakeholders? Yeah. So I suppose just to summarise up some thoughts about if we set up something like the ACC for Ireland. I mean, you know, I think it's obvious that there are definite benefits with it, and that the focus is on the injured person and it's comprehensive, and the claim cost should be lower. And then personally, I believe it would be better for society. Other people may have different opinions. Of course, there are quite a few buts, and I have seen some of the questions that have come in, and they have raised some of the issues here and some other issues. I mean, it is a very radical change to what we currently have. A key thing is the loss of the right to sue. When that was introduced in New Zealand, that was in the 1970s. Like, the world was quite a different place back then. Getting rid of people's right to sue nowadays in Ireland is quite a different thing to take on. Additionally, New Zealand is an island in the middle of nowhere. I hope Ross doesn't take offence with that, but it's not as connected as we are to other countries. So, like, we have, you know, EU nationals and non-EU nationals now at our Northern Ireland border, like, regularly driving cars here, working here. And, you know, we also have obligations under EU law. I don't know the answer to this, but I suspect there would be quite a lot of issues to think around in that area if we wanted to look at something like this. There's also the comments on, does insurance drive better behaviour? But I think, you know, I think that's not something I particularly worry about. I think the New Zealand experience has shown us there are ways around that. So I guess just to wrap up, I would say that we've just been through an unprecedented year in 2020. But if there's one lesson we should take from it, is that we can take unprecedented action. And I do hope, like, there's a lot of talk now of finally doing something proper about climate change, which also requires, like, unprecedented action. So, you know, maybe we should take the opportunity and think, you know, is there something more radical we can do within the constraints that we're working in? So I suppose to finish off with a call to action and just say, well, let's take advantage of the 2020 vision and let's just at least ask the question, what is best? And then what can we actually achieve given the constraints that we're working in? Should we consider something like what New Zealand are doing, or even just a part of it? And yeah, that's where I will finish up, because I realize it's very late. And yeah, thank you for listening. If any of you would like to ask questions, we're happy to try to answer them, or just contribute comments. I mean, opinions are welcome.
Thank you, Grania, and thank you, Ross. I think that was very informative. I definitely enjoyed the session. I might just ask, we have 3 individuals who've posted questions. So I might start with Eamon Kelly. Now, Eamon has posted 4 questions. So Eamon, I don't know, is there one in particular that you would like to ask to get started on the Q&A? And I think the Society will unmute Eamon, if that's okay.
Yeah, thanks, Grania and Ross. And yeah, I kind of actually worked in accident compensation in Australia many years ago and was on the ACC. So it's very interesting to see how it's going now. I guess there's lots of different sort of questions in my mind. One was sort of, and I think you kind of answered, Ross, was did you fully eliminate common law and the adversarial system? But to me, that's the biggest issue in Ireland, among many issues, is the right to sue. And how do you eliminate that, frankly? Is that possible to eliminate that and to kind of remove the common law aspect of compensation and push it fully onto no fault? And then secondly, it's sort of more just kind of nitty gritty is, can you give us an example of how people get access to benefits? I know sometimes you have certain impairment thresholds, like how do you assess if somebody is really suitable to be compensated? Maybe you can give some examples of that. Thanks.
Yeah, so I mean, I guess in terms of your first question, yeah, so it is taken out, so the right to sue for an accident is removed, and it's explicitly removed by the Act. But to Grania's point before, it was, yeah, this was done back in the early 70s, so it's not something that's been brought about that recently. So it's kind of always been there, and I suspect because it was in the original Workers' Compensation Act as well. So that was a no-fault system, so I assume it had similar, though I haven't said I haven't read the 1900 Act. But yeah, so it's basically written into law, so there is no right to sue. But having said that, there is still the right to challenge. And so you do see cases of people who are denied ACC compensation who will then take ACC to court around that. But it's the challenge is against ACC and denying their cover, as opposed to, yeah, so again, the origin of the accident is irrelevant. It's just, I think ACC should have accepted this claim as opposed to denying it, tend to be where the cases come up. And so that tends to be where you get the largest changes in the scheme. So where ACC will lose the case, and it means that a bunch of claims that they've previously excluded now need to be included again. And so you'll often see sort of step changes and benefits there. In terms of your second question around how are the benefits provided, so I think this sort of comes back to the way the claims are handled by ACC. So as I say, I mean, a large number of cases, so if you go to the doctors in New Zealand, one of the first things they'll say is it an accident? And so every once in a while you'll see articles saying that New Zealand's got the highest accident rate in the world, and I don't believe we're the riskiest country in the world. I just believe we capture all of our accidents. So, you know, if you have a minor accident at home and you sprain your ankle and you go to the doctors, they say, is it an accident? You say yes, and so it gets counted as an accident, whereas anywhere else in the world it wouldn't be counted as an accident. And even if you got surveyed, you know, a year's time, did you have any accidents in the last year, you'd forget about that one, you know, sprained ankle or something like that. So I guess for the simpler claims like that, they tend to be automatically accepted, and they are dealt with at the front line. So the doctor or the physio or whatever will fill in the form, and I guess they have a pretty good handle around what is and isn't an accident. For the more technical ones, they will tend to go to ACC, and ACC will make a decision. So, and I guess the more serious accidents, you'll tend to end up with an ACC case manager, and so that's when you get managed individually by someone at ACC, and so that's where. So I guess 99% of the claims probably ACC don't even see, they just automatically accept. But then, you know, for those larger claims, that's when ACC, yeah, and they do have a number of case managers around the country, and that's, yeah, so when you start talking to case managers, and that tends to be when ACC are making more of those calls around, is it a claim or isn't it? And some of it will depend on the type of claim you've got as well. So if you have, you know, a dodgy shoulder and you go to see a specialist and they then say, oh, you need surgery, they'll say, well, we'll lodge an ACC claim, but they, yeah, you may or may not be accepted. So, and so again, it's the type of benefit is when ACC start looking at it. So whereas if you're just going for a physio, it probably would have been accepted, but because you've gone to surgery and obviously there's a higher cost associated, that's where it gets more reviewed by ACC.
Okay, thanks, Eamon and Ross. The next question is from Jonathan Gould. If I could ask the Society just to unmute Jonathan. So the question is, why does the ACC give lump sum payments for permanent injuries as opposed to weekly payments? I don't know, Jonathan, if you have anything else you'd like to add.
No, that was it really. It just occurred to me that from Ross's talk that this was an opportunity to, you know, effectively to pay money as it is needed rather than having to sort of lump sum things up front. So I just wondered what the lump sums were.
Yeah, so I mean, it's not one of the more common features, and it's to cover, I guess, those types of injuries. So yeah, for example, if you've lost a finger in an accident, and so you're not, yeah, it hasn't stopped you working, so you can still continue to work, so you don't receive weekly compensation or something like that, but it's going to create a permanent injury, and so in that situation, you've lost a finger, so therefore here's a lump sum payment to cover you for that loss. So, you know, so you'll also be covered for obviously medical treatments and things that happen. So the lump sum doesn't replace the medical treatments. It's just a payment in relation to the fact that you've suffered a permanent disability effectively relating to an accident.
And is there some sort of a scale for that?
There is, yeah, there is a scale. It's not widely publicised. Obviously, we don't want people running around chopping off fingers to get extra money. But there is, yeah, underlying, there is a, and so effectively the lump sum payments, there is an underlying table, and so they've got rules, you know, so if you've got 10%, 20% disablement or whatever, there'll be a benefit associated with that. So,
thank you.
Okay, thank you both. So moving on then, if I can ask Alexander Tully to be unmuted. And Alexander, you have two questions posed for Ross. So I don't know if you'd like to pick one of them, maybe.
Thanks, Steve. Ross, as you can tell from my accent, I'm from the same neck of the woods as you are. But it's mainly a question for Grania. And it basically relates to when foreigners come into the jurisdiction, have an accident, they're not happy with the level of compensation, they go back to their home nation and sue. You've got a classic example would be a person has an accident in New Zealand, he's a US citizen, sues in a US court, the US court grants him damages. A New Zealand court will not recognise or enforce those damages, and that's fine. But in an EU context, that creates a huge amount of difficulty for a member state like Ireland, which is tied up very intricately with the EU, especially if it's a non-Irish EU citizen which is suing.
Yeah, I don't think I can really add very much to that. Like I think you put your finger on like a major issue for us if we wanted to do something like this here, like because we are so connected and we are part of the EU, and we also have the Northern Ireland complication, you know, the additional complications that Brexit has brought with that. Like there are a lot of knotty questions that would need to be considered, and it may be that these are, you know, red lines that just say no, we can't do this. But you know, I think it's probably still worth asking the question. But yeah, I don't have the legal knowledge to.
Yeah, and I suppose just quickly, the other statement I made rather than a question, when they introduced the ACC scheme into New Zealand, big time in the early 1970s, a whole swathe of lawyers became unemployed And I think the Law Society in Ireland would see themselves to be a big stakeholder when it comes to introducing something like ACC into Ireland, as they would be would have a very detrimental effect on their business.
Yeah, and it would. I mean, it would be hugely detrimental. But, you know, I mean, one of the perils of democracy is that we are often held hostage to, you know, a vocal minority. I mean, a change like, if we were to consider a change like this, I mean, this is something that the society as a whole would have to decide on. And I suppose it's, you know, putting my optimistic hat on, I think it's one thing that Ireland has managed to do not so bad in recent years. I mean, we've put some controversial things through citizenship assemblies, which is, you know, we get a canvas a wide range of opinion of ideas. And just, this is just my personal opinion, I think it would need to be some type of citizens group like that, because otherwise the, you know, allowed vested interest, who naturally enough, you know, this is a huge threat to them. I mean, something like this is a threat to, you know, would be a threat to those of us who work in insurance as well, you know.
Yeah. No, Grania, I agree. I think it's, in the current environment where we're looking at changing a lot of things as a result of the pandemic, it's an ideal time to try and introduce something like this where you're going to get less resistance.
Yeah, thank you.
Yeah, cheers, thank you.
Thank you, Alexander. Just in the interest of time, we've only 2 minutes left, so I just propose there's some anonymous questions, but I'm not sure obviously who that is. So I might ask Dermot Marin just to give us one final question, if that's okay, Dermot. I think you've 2 posted.
Yeah, thanks, Niamh. I think that the really follow up to Alex's point and a follow up to Eamon's question on common law. It's probably as much of a comment. When PIAB was introduced, it initially attempted to exclude the lawyers, that you couldn't get legal representation if your case was going through PIAB. And then the lawyers took a case, which they won, that there was a constitutional right to legal representation. And I don't know how, you know, obviously it's a common law jurisdiction in New Zealand, how that marries with how the ACC works in New Zealand, and if that would create a similar impediment to introducing it here.
I guess from the Irish point of view, yeah, do we need to change our constitution? We've done before, so yeah. I don't know in Ross whether, do you have issues with representation like that, or is it just people can take cases to ACC if they disagree with their decisions?
Yeah, I mean, that's what we tend to see. It's people taking cases against ACC. I'm not aware of anything that's tried to go back to the original right to sue. I guess the Act's pretty clear. So, but yeah, again, I'm not a lawyer. I haven't gone through and sort of waded through the case law. I'm sure someone must have challenged it back at some point in time. But yeah, it's something that you just don't see here at the moment. So.
Thanks. Thanks, Dermot and Ross and Grania. So I'd just like to close then. We're just on the button of 8 o'clock, so I might close the session if that's okay. And thank the presenters first and foremost, and obviously the Society for hosting in the background, and for all the attendees. Thank you very much.